Okay, hello everyone. Hi guys, how are you all? Hi everyone. Good afternoon, guys. Am I audible to everyone? Am I visible to everyone? Audio, video, everything is good, working fine, yes or no? Kindly just please comment once, everyone, whoever are watching this video. Audible? Am I audible to everyone? Am I visible to everyone? Hi guys, hello. So today we have to run the marathon for Module B. So Module B, all the one words, all the important questions I will be discussing in today's class, everyone. So kindly please like and share the video to the maximum you can. And if you haven't subscribed this channel yet, guys, please subscribe this channel and press the bell notification icon. Everyone, you guys. Kindly please just like and share the video to the maximum you can. And if you haven't subscribed this channel yet, kindly please subscribe this channel and press the bell notification icon. So let's start discussing with PPB Module B. So the very first question is, the shares of a public limited company are. So we have to see the shares of a public limited company. These are not transferable. These are transferable. These are sovereign security or negotiable. The shares of a public limited company are. Everyone, please answer this question. Everyone, you guys, please answer this question. The shares of a public limited company are. So, when we are talking about the difference between a public limited company and a private limited company, right? So, let's talk about first of all the difference between these two. Public limited company are those company where the shares of the government is either more than or equal to 51%, right? So if the government shares are either more than or equal to 51%, that are called as the public limited company. Okay, whereas the private companies are those company where the shares of the government are less than 51%. The first difference, minimum number of members required to build a public limited company and the maximum numbers of member. Here the minimum number of member required to build a public limited company are 7. Here it is maximum, here is no limit. Here the maximum number of members can be 200. If we talk about the shares transferability in the public limited company, the shares are easily transferable, right? The shares are easily transferable. Whereas in a private limited company, the shares are non transferable. The shares are what? These are non transferable. Clear? So, when we are talking about the public and the private limited company, the shares of a public limited company, these are transferable. Not transferable, it is a private limited company. Clear? Done? Give me 1 minute. Let the answers complete and then we will start. Okay. Hey everyone. So the first question was the shares of a public limited company. So we have done it. Now, next question. Let's start discussing the next question. Okay, a bank has 200 lakh rupees, has an advance of 200 lakh classified as a doubtful asset. The realizable value of the security is rupees 80 lakh. The asset has remained doubtful for 2 years. Now, how much the total provision should the bank make? Now, this is a good question. Now, tell me the correct answer, everyone. Okay, so tell me the correct answer, everyone. A bank has an advance of rupees 200 lakh. It is classified as doubtful asset. The realizable value of the security is only 80 lakh. The asset remained doubtful for 2 years. Now, how much total provision should the bank make in this case? Everyone, please answer this question. Everyone, please answer this question. Everyone, please answer this question. So, the correct answer is what? Okay, now, so before discussing this, let's see this. So, in the case of a doubtful asset, okay, 100%, 100% of the extent to which the advance is not covered by the realizable value of the security to which the bank has a valid recourse, and the realizable value is estimated on the realistic basis, means 100% provision should be kept in the case where the advance is not covered by the realizable value of the security, right? And the realizable value is always estimated on the realistic basis. Now, in regard to the secured provision, provision may be at the rate of 25 to 100% of the secured portion, depending upon the period for which the asset remains doubtful. Okay, means if there is a secured portion, means whatever the portion which is covered by the realizable value of that particular loan, right? For that, the provision is either 25 to range between 25 to 100% depending upon the period for which it remained doubtful. So up to 1 year, if we talk about up to 1 year, the provision is 25%. Between 1 to 3 years, the provision is 40%. And more than 3 years, the provision is 100%. Clear? So when we are talking about this particular question, the question says that the bank has an advance of 200 lakh and the realizable value of the security is 80 lakh, means the secured portion here is what? The secured portion is 80 lakh. Okay, and the unsecured portion is what? Unsecured portion, if we have to calculate the unsecured portion, the total credit minus the secured portion, so the unsecured portion is 120 lakh. So for the unsecured portion, it is 100% of position. So 100% of unsecured, it means 120 lakh plus. Now the asset remained doubtful for 2 years. So between 1 to 3 years, 40% of the provision is there. So in is 80 lakh, 80 lakh, 40%. 80 lakh ka 40%, the 40% of 80 lakh. So if we talk about the correct answer, it is 32 lakhs. So the total is what? The total is 152 lakhs. So C is the correct answer, everyone. C is the correct answer. Any doubt here? If you have any doubt, please ask. Everyone. Any doubt? If you have, kindly ask your doubt. If you don't have any doubt, give me a thumbs up. Everyone. If you see any doubt, if you have, you can just ask your doubt. If you don't have any doubt, you just have to give me a thumbs up, everyone. You just have to give me a thumbs up. Everyone, guys. Clear? Yes or no? If you don't have any doubt, you just have to give me a thumbs up. If you have any doubt, you are free to ask your doubt. Everyone, you guys. Clear? Can we move out to the next question? Now, can we move to the next question? Okay, so now next question is what? Individual borrowers are governed by Dash Act, Partnership Act, Limited Liability Partnership Act, Indian Contract Act, or none of the above. Individual borrowers are actually governed by which act? Everyone. Individual borrowers are governed by which act? So the correct answer is very simple. You can all answer this question. So individual borrowers, they are governed by Indian Contract Act. Individual borrowers, right? Next question. Cash credit facility is a fund-based facility, non-fund-based facility, both fund-based and non-fund-based facility. The cash credit facility. Everyone, the cash credit facility is a fund-based facility, non-fund-based facility, both fund and non-fund based facilities. Everyone, please answer this question. So the correct answer is what? First of all, if we talk about the fund-based facility, it is the direct flow of cash where there is a direct flow of cash. Okay, from the borrower, from the creditor to the borrower, to the debtor. Non-fund based facilities are not the direct flow of cash. Instead of this, they are providing guarantees, right? Or they are providing the sureties. That is the non-fund based facility. So when we are talking about cash, credit, overdraft, this is actually considered as a fund based facility. Clear? Done, everyone? This is actually considered as a fund-based facility. Everyone who is watching this video, kindly please like and share the video to the maximum you can. Everyone. Done. Next question. PQR Limited enjoys a working capital facility with Bank A. It has approached the bank for the letter of credit limit for the purchase of raw material. The relevant information provided is as given below. The projected value of the raw material consumption 3,600 lakh. Projected value of the raw material purchase on credit 2,400 lakh. Time taken for advising letter of credit 10 days. Time taken for shipment and transit period 20 days. Credit agreed upon the seller and the customer, or the projected available credit period for the calculation of MPPF was funded limit, whichever is less, is 30 days. Now you have to calculate the credit limit required. Now here you have to just calculate the credit limit required. Easy question. You just have to calculate and tell me the correct answer. You just have to calculate and tell me the correct answer. Everyone, please answer this question. This is an easy question. You can easily answer this question. This is a very easy question. You can all answer this question. Right? Everyone, please answer. Everyone, guys, please answer this question. Just calculate. When you calculate, when you see, you can just easily answer this question. When you just calculate it, when you just analyze it, you can just easily answer this question. Everyone, please answer. Okay, now tell me. When we are talking about, first of all, let's see how much time is taken in one operating cycle. First of all, we have to take the time taken in one operating cycle. Now, what is the time taken in one operating cycle? It is 10 days plus 20 days plus 30 days. It is 60 days, the time taken for one operating cycle. Now, in such operating cycle, in 1 year, how many operating cycles are there? In 1 year, how many operating cycles are there, considering there are 360 days in a month? So 360 divided by 60. It is 6 operating cycle in a year. Now, for one operating cycle, the purchase credits are 2400 lakhs. So, if for the one purchasing cycle, the purchase credit are, if for the total annual, the purchase credit are 2400. Okay, and in total year 6 cycles are there. So for one cycle, how much credit are there? It is 400. So 400 is the letter of credit limit required. Okay, now this is here very simple. You just have to calculate the time taken by one operating cycle, then number of cycle, then we have to see the projected value of raw material in a complete year, that is 2400 lakh. So for in one purchasing cycle, or in one letter of credit cycle, the complete time period is 2400 lakh divided by 6, it is 400 lakh. Clear? Done, everyone? Clear, guys? Now next question. All the above working capital means, now what is included in working capital? Requirement for day-to-day operation, excess of current liabilities over current asset, fixed asset minus current asset, or none of the above. Simple question. Simple question. Please answer this question. Very simple, very easy. Please answer, guys. You can all answer this question. It's a easy question. It's a simple question. You can easily answer this question, guys. So the correct answer is what, everyone? It's simple. Working capital means requirement for day-to-day transaction, yes. Excess of current liabilities over current asset. Now working capital, the formula of working capital, if you all remember the formula of working capital, everyone just please answer this question. The formula of working capital is current assets minus current liability. It is not liabilities minus asset. So current assets minus current liability means excess of asset over liability. So that's why B is wrong. So B is wrong. So none of the above is wrong, because A can be the answer. Fixed asset minus current asset. No. So A is the correct answer, everyone. Done? Clear? Now, next question. In bankers' parlance, credit risk is lending. Credit risk in lending refers to what? Default of repayment by a borrower, default of bankers in maintaining the statutory liquidity ratio, default of bankers to release credit to a borrower, or none of the above. In bankers' parlance, credit risk in lending refers to what? Everyone, please answer. In a banker's parlance, credit risk in lending refers to what? Default of repayment by a borrower, default of bankers in maintaining the statutory liquidity ratio, default of a banker to release credit to a borrower, or none of the above. Simple. Credit risk. So, credit risk is the default of repayment by the borrower, right? So, A is the correct answer. Good. Next question. Which of the following statements are true regarding the minimum support price scheme? Which of the following statements are true regarding the minimum support price scheme? Statement 1. Minimum support price scheme ensures that covered agriculture produces are purchased from the farmer at the declared MSP to prevent the distress sale. The Food Corporation of India is the nodal agency for the implementation of MSP scheme. Third, the Government of India announces the MSP for 50 crops at the beginning of each season. We have to answer this question. Minimum support price, everyone. Please answer this question. The minimum support price. So if we want to have a correct answer, what is the correct answer here, everyone? So minimum support price. Easy question. You can simply answer this question. It's a very easy question. You can all answer this question. Minimum support price ensure that the producers, the agriculture producers are purchased from the farmer at the declared MSP to prevent distress sale. Correct. The Food Corporation of India, FCI, is the nodal agency for the implementation of MSP scheme. Correct. The government of India announces the MSPs for 50 crops. No, it is for 25 crops which has been announced. Okay. So the correct answer for this particular question is first and second. So B is the correct answer. Statement 1 and second are correct. Clear? Done? Next question. Net working capital means what? Current assets minus current liability, owned funds minus goodwill, use of assets plus sources of fund, or none of the above. Net working capital means what, everyone? Net working capital means what? Easy, simple, you can all answer this question. Net working capital means what? Guys, answer this question. Net working capital means what? Now, here I have told you the correct answer. Okay, net working capital means what? You can easily answer this question. Okay. So net working capital is current assets minus current liability. Recently told you it is the excess of assets over the liability. Current asset minus current liability, that is the net working capital. Okay. Next, term loans means loan payable over a period of 1 year to 10 year, repaid in installment over a period, utilized for acquisition of fixed asset or all of the above. Term loans means what? Everyone kindly please like and share the video guys, and if you haven't subscribed this channel yet, please subscribe this channel and press the bell notification icon. Please subscribe this channel and press the bell notification icon. Everyone, you can simply answer this question, guys. Everyone, please answer. Okay, so term loan. Okay, they are payable over a period of 1 to 10 year, repaid in installment over a period, and utilized for acquisition of fixed asset. Yes, all of the above are the correct answer. So yes, D is the correct answer. Advantage of cash budget could be borrowers have the plan has to plan the cash requirement. Banker can spot a danger signal quickly. Banker can plan his resources to meet credit demand, or all of the above. What are the advantage of cash budget? Everyone, what are the advantage of cash budget? We can easily answer this question. What are the advantage of cash budget? Okay, so borrower has to plan the cash requirement. Yes. Banker can spot a danger signal quickly. Yes. Banker can plan his resources to meet the credit demand. Yes. So D is the correct answer. All of the above is the correct answer. These are the advantages of the cash budget. Okay. Next, a local manufacturing company, tech innovator, produces electronic components. The company is evaluating whether it qualifies as a micro or a small or a medium enterprises based on the investment in machineries and annual turnover. Now, the company's investment in the plant and machinery is 8 crore and its annual turnover is rupees 40 crore. Based on this information, which category does tech innovators fall into? Which category does the tech innovator falls into? Micro, small, medium, or doesn't to qualify as an enterprise under the MSME rule? Everyone, please answer this question. Very simple. So we have to correctly define it with the current micro, small, and medium enterprises category. So there are definition change. We know that the definition has been changed. So according to the change and the recent definition, we have to answer this case study, everyone. So the correct answer is what? Just please kindly like and share the video, guys, whoever are watching this session. First of all, let's talk about what is the previous and what is the revised version, right? So this is the revised means the 2025 budget, okay, where we have announced the new definition of micro, small, and medium enterprises. And this is compulsory to learn for all of you because the earlier definition, now the question has been asked from the recent definition, okay? So first, micro enterprises. If we talk about the micro enterprises, 2.5 crore means the investment shouldn't be exceeding 2.5 crore and the turnover shouldn't be exceeding rupees 10 crore. For a small enterprises, the investment is not exceeding 25 crore, whereas the turnover doesn't exceed 100 crore. Whereas the medium enterprises, the investment shouldn't be exceeding 125 crore, while the turnover shouldn't be exceeding 500 crore, right? So this is the medium enterprises. So we have the micro enterprises, small enterprises, and medium enterprises. Now here, the turnover doesn't exceed 40 crore and the machinery is not exceeding 8 crore. So machinery is not exceeding 8 crore means here, and it is not exceeding 40 crore. 40 crore means here. So it is what? It is a small enterprise, right? So P is the correct answer, everyone. Clear? Any doubt in this, everyone? If you have, please ask. Any doubt in this question, guys? No doubt. Can we move forward to the next question? Yes or no? Okay, next question. Okay, who determines the MCLR, marginal cost of lending rate? Ministry of Finance, bank themselves, RBI, or NABARD? Marginal cost of lending rate, everyone. Who determined the MCLR, marginal cost of lending rate? Everyone, kindly answer. So first of all, let's just see what is MCLR. What is a marginal cost lending rate? So marginal cost lending rate is equals to base rate plus risk factor. Okay. Now what is a base rate? Base rate has been fixed by Reserve Bank of India and it is considered as the minimum rate at which RBI is giving loan to customer. Sorry, not RBI is giving loan to customer. Sorry. It is the minimum rate at which no bank is allowed to give loan to their customer. Okay, minimum rate at which no bank is allowed to give the rate to their customer. That is called as the marginal base rate. Okay, so the minimum base rate at which the bank is lending loan to the customer, you can say this also, that is base rate, and base rate is fixed by RBI. Now, in base rate, the banks itself add some extra risk factor and then the marginal cost lending rate has been decided. So now this is the minimum rate at which the bank is giving loan to their customer. So MCLR is decided by the bank themselves, while the base rate has been determined by Reserve Bank of India. Clear? Now next question. Frequency of the loan reviews depend upon the loan amount, activity of the borrower, constitution of the borrower, or risk level of the account. Simple question. You have to tell on which the frequency of the loan reviews depend. Frequency of the loan reviews depend, everyone. Frequency of the loan reviews depends upon what? It's depend upon the loan amount? No. It depends upon the activity? No. Constitution? No. Risk level of the account. So if bank is considered, the account is actually divided either into a high risk, medium risk, or a low risk, right? So when we are talking about the loan, frequency of the loan review, it depends upon the risk level of the account. Okay, whether it is a high risk account, or a medium risk account, or a low risk account. Clear? Done? Next. Now consider the following statement about forming the self-help group. We have to consider the following statement regarding the forming of the self-help group. Normally, the members in a group shouldn't be exceeding 30. Otherwise, registration becomes compulsion. Generally, all the members should belong to the families below the poverty line PPL. If necessary, maximum 30, but exceptionally up to 30%. Members may be from the families marginally above the poverty line, or self-help group has more than one member from the same family. Now we have to check which of the following is the correct statement regarding the self-help group. Which of the following is the correct statement regarding the self-help group? So the correct answer is what, everyone? Which of the following is the correct statement regarding the self-help group? So the correct answer is, everyone kindly please answer this question. The correct answer is what? Please answer this question. Okay, first, normally members in a group shouldn't be exceeding 30. No, it shouldn't be exceeding 20. Otherwise, the registration become compulsory. For first is wrong. Generally, all the members should belong to families BPL. If necessary, max to 20. Exceptionally, 30 can be from the APL. Correct. Now, self-help group has more than one member from the same family. No, one member from one family. Okay, they cannot have more than one member from the same family. Okay, so first and third are wrong. Only second is the correct statement. So C is the correct answer. Clear? Next question. For the education loan of rupees 3 lakh, the margin amount required is 30,000, 15,000, 45,000, or nil. Education loan. For education loan, if we talk about the education loan of up to rupees 3 lakh, the margin which is required is what? The margin which is required is what? 30,000, 15,000, 45,000, or nil? Everyone, please answer this question. For the education loan of rupees 3 lakh. So it is nil. Here, no margin is required. Nil is the correct answer. Good. Next. Which of the following statement is false? In a deferred payment guarantee, the guarantee is to ensure the delivery of the good. A deferred payment guarantee is mostly based on a primary contract between the buyer and the seller. A deferred payment guarantee differs from other bank of guarantee issued by the bank as regard payment liability on the bank on invocation. In a deferred payment guarantee, the bank's liability come into existence only if all the installments are not paid, and not on the non-payment of one installment by the customer. Which of the following is the false state? Which of the following is the false statement? Everyone. We have to choose the false statement. Which of the following is the false statement? The correct answer is, which of the following statement is false? So we have to choose the correct answer. In deferred payment, the guarantee is to ensure the delivery of good. No. In deferred payment guarantee, the guarantee is only to provide the timely payment of the installment. It doesn't ensure the quality, the delivery of the good. No, this is the cases which is checked between the buyer and seller. As a bank who are providing the deferred payment guarantee, the guarantee is just to ensure the timely repayment of the installment, nothing else. A deferred payment guarantee is mostly based on a primary contract between a buyer and a seller. That is correct. A deferred payment guarantee differs from other type of guarantee issued by the bank as regard the payment liability of the bank on the invocation. It cannot be revoked. When we are talking about the deferred payment guarantee, it cannot be revoked at all. Now, in deferred payment guarantee, the bank liabilities come into existence only if all the installments are not paid and not on the non-payment of any one installment. That is also wrong. If you haven't paid any one installment as a buyer, you are not able to pay any single installment, then also the deferred payment guarantee come into existence and the bank has to pay on the behalf of that particular person. So which of the following are the false statement? First are false, third is false, and fourth is false. So the correct answer is C. Clear, everyone? If you have any doubt here, please feel free to ask your doubt. Everyone, any doubt? Can we move forward? Okay, next question. If the loan convenience are not observed by the borrower, it is called as a violation, a breach, a event of default, or a non-compliance. Everyone, simple question. Very simple question. If the loan convenience are not observed by the borrower, it is called as what? Everyone, please answer this question, guys. Very simple. You can all answer this question. You can all answer this question, guys. Simple, it's easy. You can easily answer this question. So, if the loan convenience are not observed by the borrower, it is called as a breach. It is called as the breach. I think it's a breach or an event of default. I think I'm confused between B or C. It is actually an event of default. When a borrower fails to observe or comply with any of the loan component. Okay, if the loan convenience are not observed by the borrower, convenient means any conditions or obligation which is laid down in the loan agreement, it is treated as the event of default. Okay, when breach and non-compliance are described, okay, in banking or legal terminology, the formal recognition of such breach is termed as event of default, right? So I think breach or event of default can be the answer. I think I'm more having the event of default, not the breach. Okay, done. Next question. ABC Limited has entered into a contract with XYZ Private Limited complete a construction project. Okay, to ensure the performance under the contract, ABC Limited provide a performance guarantee from a bank. What is the role of performance guarantee in this situation? It ensures ABC Limited will perform its contractual obligation, and if ABC Limited default, the bank will compensate XYZ for the loss incurred. It provide a direct financial benefit to ABC if XYZ Private Limited fails to fulfill its part of the account or of the contract. It acts as a loan agreement between ABC and the bank has to finance the construction project. It guarantees the completion of the project by the ABC Limited without any penalty or compensation in the case of default. Please answer this question, everyone. Please answer. Okay. So tell me the correct answer. So if we talk about the correct answer of this question, very simple. Performance guarantee. It ensured that the ABC will perform its contractual obligation, and if that company fails, the bank will compensate XYZ for the loss incurred. Yes, A is the correct answer. Simple. A is the correct answer. Nothing else. Clear, everyone? Any doubt? No. Next question. Okay. Next. Loan to value ratio in the case of gold jewelry is 50, 75, 100, or 85%. Loan to value ratio, everyone. Loan to value ratio. Loan to value ratio in case of gold jewelry is what? 50, 75, 100%, or the 85%? Everyone, please answer. Loan to value ratio. Everyone, please answer. Okay. So when we are talking about the loan to value ratio, 50, 75, 100, or 85%. Obviously 75. So if you are pledging the gold of rupees 1 lakh, for example, okay, the maximum loan that can be disbursed is 75,000, not more than that. It is the maximum amount. Minimum, the maximum amount, not necessary that 75,000 is given to you. The maximum that can be sanctioned is 75,000. Clear? Next. Loan against minor term deposit can be granted if the documents are signed and if the minor has completed the age of 14 years. Cannot be granted under any circumstances as the minor does not have the contractual capacity. Can be granted to the guardian of the minor if the necessities of that minor, if it is the for the necessities of the minor, can be granted only with the permission of the court. Everyone, please answer. Loan against minor term deposit. Please answer. It's an easy question. You can all answer this question, guys. And please like and share the video to the maximum you can, whoever are watching this session. Kindly please like and share the video to the maximum you can. It's very easy. It's very simple. It is section 68 of the Indian Contract Act. Okay. The loan against the minor term deposit can be given if it is for the necessities of the minor. It can be granted to the guardian of the minor if it is for the necessities of the minor. And Section 68 of Indian Contract Act says that the minor's asset, or you can say property, is liable for the repayment of such loan in case of default. So obviously C is the correct answer. Clear? Next question. Document of title to goods have been defined in it. Which act? Documents to title of good has been defined under which act? Everyone, please answer. The correct answer is what? Documents to the title of good has been defined in Sale of Good Act. So D is the correct answer. Next question. In the term of Section 19(2) of Banking Regulation Act 1949, no banking company shall hold shares in any company, whether as pledge, mortgage, or absolute owner of an amount exceeding 30% of the paid up capital of that company or 30% of its dash, whichever is less, held in a demat account or demat form, should be included for the purpose of determining the exposure limit. So you have to just fill in the blank here. You just have to fill in the blank here. Everyone, please answer this question. In terms of Section 19(2) of the Banking Regulation Act 1949, no banking company shall hold shares in any company, whether as pledge, mortgage, or absolute owner of the amount exceeding 30% of the paid up share capital of that company or 30% of its own paid up share capital or reserve. right? So A is the correct answer. We just have to fill in the blanks. Sometimes these type of questions can be very tricky for all of you. Okay. Next, loans against the security of the share, debentures, or public sector unit undertaking bond. True individual should not exceed the limit of batch per individual if the securities are held in the demand form. Everyone, please answer this question. Please answer this question, guys. Loan against the security of the shares and debentures and public sector unit bonds to individual should not exceed the limit of rupees 20 lakh per individual borrower if the securities are held in the demand form. So yes, C is the correct answer. Then XYZ Limited, SYZ Limited has taken a loan of rupees 5 lakh from a bank, and the loan is guaranteed by three securities or sureties A, B, and C due to unforeseen circumstances. Okay, now read it out and then answer. Everyone. Okay, so XYZ Limited has taken a loan of 5 lakh from a bank, and the loan is guaranteed by three sureties A, B, and C. Due to unforeseen circumstances, the bank decided to release B from the guarantee agreement. However, the bank continues to hold A and C responsible for the entire loan amount in the case of default. What is the legal obligation of releasing B from the guarantee? B is released from the liability, and A and C are discharged from their obligations as well. B can now claim compensation from A and C for the amount released by the bank. The loan is immediately cancelled and the entire amount is given for ABC. A and C remains liable for the loan amount and B is not freed from any responsibility to the other sureties. Everyone, please answer. Everyone, please answer this question. Very easy, simple question. You can all answer this question. Very simple, very easy. So there is a loan of 5 lakh and the guarantors are three, A, B, and C. Bank decided to release B from the guarantee agreement. However, A and C are responsible. Okay, so what is the legal obligation here? So B is released and A and C are discharged from their obligations as well. No. B can now claim compensation? No. The loan is immediately cancelled? No. A and C remains liable for the loan amount and B is not freed from any responsibility of other sureties. Correct. So D is the correct answer. Clear? Done? Next. The usual form of contract of guarantee is by the way of power of attorney, indemnity bond, guarantee bond, or none of the above. The usual form of contract of agency is by way of a power of attorney, indemnity bond, guarantee bond, or none of the above. Everyone, please answer. Agency business. It is power of attorney. The contract of agency is by the way of a power of attorney. Next, the pawnee can sell the goods if the pawner fails to pay. False or true? Everyone. Pawnee can sell the goods if pawner fails to pay. Yes or no? Please answer this question. Yes, it is true. Next, the bailee can keep the goods bailed to him and he need not to return the same to the bailer. False or true? Contract of bailment, bailee and bailer. The bailer can keep the goods bailed to him and he need not to return the same to the bailer. You have to answer it. False or true? Everyone. False or true? Yes, it is false. They have to return the goods. Next, hypothecation is an implied pledge in a case where delivery of goods is given, constructive possession of obligation is given, constructive possession of the good is given, or none of the above. Hypothecation. Simple. Hypothecation. Hypothecation. What is hypothecation? What is hypothecation? Very simple. Constructive possession of the good. Hypothecation is what? Hypothecation means when the borrower can retain the physical possession of the goods. Okay. But the lender has the legal control and ownership and right over that goods. Right. So in the hypothecation, you don't have to deliver the good. Okay. You don't have to give the obligation. You just have to pass on the constructive possession. Example, I have hypothecated my car. In this case, the car uh, is in my possession, but the legal right of that car I hand it over to the bank because I have taken a loan. So C is the correct answer. Clear? That next, simple mortgage is created by unwritten promise, oral assent, oral agreement, or an instrument in written. Everyone, please answer this question. Simple mortgage. Simple mortgage. Everyone, simple mortgage. Yes, so it is an instrument in writing. Next, what is the statement true regarding the priority sector loans up to rupees 25,000? Loan related and ad hoc service charges can be levied on the loan amount of rupees 25,000. Inspection charges can be levied. No loan related or ad hoc service charges should be levied on the priority sector loan of rupees 25,000, and this limit applies per member in the case of self-help group and joint liability group. Only self-help group and joint liability group are exempted from the service charge on loan amount up to rupees 25,000, not individual borrowers. We have to see which of the following is the correct statement here. Which of the following is the correct statement here? Yes, so no loan related or ad hoc service charges should be levied on the priority sector if the loan amount is up to rupees 25,000. Clear? So C is the correct answer. This is the true statement. Next, as per the Stamp Act, a document executed in India shall be stamped only before execution at the time, but before filling, within 30 days after execution, before or at any time of the execution. Please answer. Please answer this. As per the Stamped Act, we have to answer as per the Stamped Act. As per the Stamp Act. It is either before or any time of the execution. Now, when will a loan become NPA? Interest on loan amount or installment overdue for a period of more than 90 days. Account is out of order in the case of overdraft or cash credit. Bills remain overdue for more than 90 days. All of the above or only A and C. Everyone, please answer. When a loan become non-performing asset? When did a loan become a non-performing asset? When did a loan become a non-performing asset? Yes, it is only A to C. A and no, A and C. All of the above is the correct answer. All the three conditions are there, right? Now, last question. Direct advances to the agriculture and MSc under standard asset category requires a provision at the rate of what? It requires a provision at the rate of what? Everyone. It requires a provision at the rate of what? Everyone, please answer. So it requires a provision of D 0.5%, right? So this is it, guys. This is all for today. I hope that you all have enjoyed the session. Thank you so much for watching this session. You can just download free of cost this PDF from the Oliveboard app. All you have to do is to just download the app and click on the YouTube class PDF section, and you can just download free of cost. Okay. So thank you so much. Take care, everyone. Bye bye, guys. Bye, everyone. Take care.